The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Scorebox Europe. I can tell you we've already had, in the last couple of seconds, an absolutely huge UK GDP, but we'll come to that in a few moments' time. Welcome to Scorebox Europe. I'm Steve Sedgwick with Ben Boulos, and these are your headlines. The S&P 500 and Nasdaq closing at fresh record highs as investors hope for an end to the war in Iran. That risk-on sentiment carrying over to the Asian session, with the Nikkei also hitting new highs.
The White House raises hopes of a peace deal with Iran, with the two sides expected to resume negotiations in Pakistan next week, while leaders from Israel and Lebanon are set for ceasefire talks today. And at the IMF Spring Meetings in Washington, European policymakers outlined the risks and uncertainties of an extended conflict, telling CNBC they can only confront developments as they come.
We're probably going to have less growth and more inflation. This is a central scenario. Obviously, there's risks on both sides.
We have to look at what is coming next. In 2 weeks, we can see a lot of new things coming.
If only. I'm sure Rachel Reeves and the rest of the UK government, if only we didn't have this war, they could be ebullient this morning on the back of these numbers and say the UK economy is now growing. But the problem is, because of the war, everything's backward looking in these figures. I've teased you enough. Look at that figure at the bottom of the screen. Up 0.5% month on month February GDP. Well, the range was from pretty much 0 to up 0.3. So they have knocked the ball out of the park. And there are some very interesting figures. It is the services sector that has once again outperformed, up 1.4% year on year versus Reuters poll of up 0.9%. Manufacturing suitably downbeat still, I'm afraid, down 0.5% year on year versus the poll of down 0.3%. So manufacturing mildly worse. Services way better. Industrial output a little bit better. Negative 0.4% year on year versus negative 0.9% expected. GDP output in February, up 1%. Reuters poll, up 0.6%. Look, I'm not even going to go into too much more of the details because the truth of the matter is it's backward looking, but it is good data. Unambiguously positive data for the UK economy, apart from the fact that we are so backward looking because of the events we've seen over the last few weeks or so. So let us move on, because speaking at CNBC's Invest in America Forum, speaking with Sarah Eisen, UK Chancellor of the Exchequer Rachel Reeves said that it was wrong to end talks with Iran and turn to war.
The question is not whether you like or dislike the Iranian regime. I strongly dislike the Iranian regime, but how to achieve the change that you want to achieve, whether it is getting the ending the nuclear weapons program. But, you know, Iran doesn't have a nuclear weapon today.
Not yet.
No, but they don't have a nuclear weapon today. And what do people think is the best way to stop that from happening? Is it through conflict or is it through diplomacy? And I believe it is through diplomacy. There was a diplomatic channel open. Conversations, there's discussions, formal discussions were happening. I think it was a mistake to end those and to enter into conflict, because I'm not convinced that we are safer today than we were a few weeks ago.
All right, let's get to George Brown, senior economist at Schroders. And we've already been talking, Ben, George and I, about it's great. I mean, it's a good figure, but there's only a certain amount we can put in this given events since.
Yeah, it's a sort of like what could have been kind of number, isn't it, for the Chancellor? But whilst it's a big surprise for the market, actually it's not a huge surprise for myself, because what we've been looking at Schroders is that if you look since 2022, what you've had is this pattern of really strong growth at the start of the year, which then tails off towards the back end. So that suggests there's some residual seasonality. The fact we've had a big, strong rise in the services side of the economy suggests that there is that residual seasonality linked to the pandemic. So not hugely surprising from my side.
No.
I'm not really sure it's reflective of actual conditions in the economy.
No, and you were asking me about the January figure. I finally found it. Upwardly revised growth was 0.1% versus, I think it was 0.0, wasn't it, previously? Look, I don't want to be dismissive of a good figure. It's great. It's good news. But as you've already said, still stuff coming out on the seasonal basis as well. How do you think the UK economy is faring at the moment? I mean, that's the key question.
Yeah, I think we're going into, so obviously this is stale data. We're going into this sort of new world of with the Iran conflict. Going into that, whilst the February numbers would suggest actually we're in a strong position, actually the situation on the ground is probably not quite like that. The labour market's clearly been deteriorating. The unemployment rate's rising above 5%. So the economy doesn't look like it's doing all that well. And actually, I'm quite surprised that the IMF's forecasts are only now just for 0.8% for this year. We had 0.9% previously.
And yet, George, the big weakness that many people talk about for Europe and the United Kingdom is our volatility of energy prices because we have to source so much product overseas. And yet the headline, I was listening on the way in, is about the natural gas prices, or the gas prices paid in the UK. We're actually coming now down below where they were before the start of the war, which I think is really, really positive. They've come down so quickly. Now, I know it's going to be volatile, but come down so quickly. So does that offer the MPC and Andrew Bailey just a little bit of a glimmer into how aggressive they have to be on holding rates or even increasing rates, or potentially open the door to potential more cuts?
Yeah, it potentially, so long as the market is correctly pricing what's happening in energy markets at the moment, and given there's so much volatility, given that the situation's so fluid, I don't think we can necessarily look at the spot price or the futures curve and say definitively that's actually what's going to happen. So, especially on the nat gas perspective, because whilst oil prices have rallied quite a lot, nat gas has remained pretty low actually, a lot lower than I would have thought, given the huge disruption that we've had, especially from LNG out of Qatar, given that's something like 20% of global supply coming out there, which has been disrupted. And yet, when you look at nat gas, very little disruption so far.
That's interesting. The definition I heard was that actually because of the price hikes that are having to be paid for product in Asia, that has curtailed demand there, which has meant actually that product is available for Western markets.
Yeah, and I was having a conversation with someone. They'd spotted an article I hadn't. I was just looking it up as well while we're talking about how households here in Britain are being urged to use more energy this summer to avoid a surplus from renewables that could overwhelm the grid.
More energy at different times.
At different times, because of the forecast bright and breezy weather. Bright and breezy is the forecast, and so there's worry.
Is that a metaphor for a crap summer?
Well, I mean, apparently there's also a record El Nino. But sorry, we're not here to do the weather forecast. I've gone off down an avenue here. But
you spent too much time with Carol Kirkwood.
You could never spend too much time with Carol Kirkwood. She's absolutely delightful. George, I wanted to get your thoughts on what we're seeing with the equity markets, and particularly in the US, because, I mean, if someone had landed on Earth and wanted a guide as to the state of the planet, they'd look at the S&P 500, they'd look at the Nasdaq, roaring to new record highs, and they'd think, well, this must be a world where all is well. There's no uncertainty, things are good. What do you think is happening there? Are we seeing American exceptionalism come into its own again?
Well, there's probably different narratives going on, but certainly if you look at equity markets right now, they look somewhat complacent given the risks that we're facing in the Middle East, I would argue. But obviously, it's not just the energy story that's going on. There's the AI story that's obviously bubbling in the background, and that continues to power ahead. But certainly, if you look at equity markets, let's say compared to bond markets or FX markets, they are certainly much more pricing in sort of risks around that kind of the situation in the Middle East. But equity markets, like I say, are starting to look a little bit complacent from that side, I think. Because from a macroeconomic side, if we do get this really sharp rise in energy prices, which maybe aren't fully captured by futures, we have to start considering recession risks. And the S&P 500, other equities shouldn't be at record highs if we're at the cusp of a recession, possibly.
And do you think then what we're seeing is investors, traders, latching on to the latest earnings results, and actually, when people are saying to them, you've got the potential of the energy price shock, the path of central bank decisions isn't entirely clear, given so much uncertainty around what's happening in Iran, they're doing the equivalent of putting their fingers in their ears and going la 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 to the economics.
Yeah, I think that's a pretty good characterisation of it. I think at the moment this is a market which has been reacting to all the headlines, all to the news, And you can't really focus in on the data, as you say, because we're in this new regime. We don't know where oil prices, where nat gas prices are going to land, what the economic fallout is going to be. So from an equity market perspective, it's hard to price that, so they're just trading off every headline. Obviously, the news at the moment now, we're kind of slave to fortune in terms of what's going to happen in terms of this ceasefire, whether or not it's going to be prolonged, whether or not we're going to get some deal between the US and Iran.
How closely have you been following the IMF meetings and what's coming out of there? Because in normal times, I suppose we'd look to that for clear directions. But if they're making decisions in a very cloudy world, it's very hard to get clear directions.
Yeah, on the desk, we tend not to put a lot of weight on the IMF forecast. They tend to be a little bit lagging. So, for instance, like the numbers for the UK are what our numbers were back in February. So we think that fundamentally that's going to be wrong. But yeah, in terms of what they're having to assess and what we as economists are having to price in is what are we going to get in terms of energy prices? And it's really hard. Normally, we just take the futures curve. But arguably, that isn't necessarily a true reflection of the risks that we're seeing today. There's probably bimodal risks to that as well. Oil prices could come down a lot quicker, let's say if you do get the recession risks, or they could be a lot more elevated if you get an escalation in the Middle East conflict. So yes, I think any forecasts at the moment are largely redundant because you're having to make so many assumptions, and clearly you're going to be wrong somewhere along the line.
You, in your couple of answers ago, you referred to AI, and I think, why is AI involved in an economy conversation? Well, for many reasons, but in this case, because Kevin Walsh believes, we understand, that a productivity boom in the United States will ultimately prove that actually you can have lower rates because it will bring down your inflationary impulses. Others argue differently, so I don't want to get involved in that from my point of view, but from your point of view, obviously the president's trying to get everyone to look over here because things are going on over there with the Jay Powell comments yet again. What are your thoughts on kind of the whole, I guess I'm giving you a free hit of this one, AI, Walsh, Powell, whatever?
Yeah, plenty there. So in terms of the AI story, Kevin Walsh could be absolutely right. There could be this huge productivity miracle that's going to happen. And certainly if you look at the productivity growth numbers in the US, that would seem to be consistent with that. But when you look at the job gains, the job losses in the US economy, it doesn't seem that, let's say, AI-exposed occupations are doing any better or any worse. So I've done a good piece on the Schroders website. I'll just put that out there as an advert. And I've looked into it. And when you look at the AI story, I'm not seeing a lot of evidence that is actually what you're seeing on the ground. Now, that might change in the next few years. But for Kevin Walsh, the issue is this is a giant punt on an unproven technology from my perspective. And I think the other Fed officials will feel the same way. So I think it's a hard case for him to make if he ever becomes the FOMC chairman.
Don't say again, the president not getting what he wants again from a very compliant FOMC chair. Oh, history repeating itself. George, lovely to see you. Thank you very much indeed for that. And George's great piece on AI and its impact is on the Schroders website. I'll try and get hold of it myself. George Brown, senior economist at Schroders. Ben, what's going on?
Let me bring you up to date because the White House has been striking an optimistic tone on the possibility of a deal with Iran, dismissing reports that the US has requested the extension of the current ceasefire. This as multiple outlets report that Washington and Tehran will likely meet for another round of peace talks in Pakistan next week. US President Donald Trump says the leaders of Israel and Lebanon will speak today. This amid reports a ceasefire between the two countries could be possible. Well, let's get an overview of all of this now from Dan, who joins us now. Dan, just run us through the details. What do we know for definite? Because as far as I'm aware, there are talks of talks, but nothing concrete yet?
That's exactly right, Ben. No confirmation of a place or time yet, but I think it's fair to say there is some cautious optimism in the region this morning, and that is also being reflected in the markets with reports suggesting that Washington and Tehran are edging closer to what could be a second round of talks and a possible ceasefire extension. In fact, Pakistan's military says a delegation has already arrived in Tehran to begin the mediation process, and US officials also confirmed to CNBC overnight that a second round in Islamabad is under discussion, although no date has been set. And of course, at the center of any deal is the Strait of Hormuz. The UAE also making its terms pretty clear here. Minister Rima Al-Hashimi telling the Semaphore World Economy Summit yesterday that reopening the strait as a free and open international waterway is Abu Dhabi's top priority. She said no deal will be accepted without a final resolution on Iran's missiles, drones, and uranium enrichment. And she was also really unequivocal on the fundamental principle here, saying nobody should control the Strait of Hormuz. That's the whole point. And I think that perspective is really important this morning as we assess this pathway towards what could be a potential diplomatic off-ramp. Clearly, there's a lot of competing voices here on what they think would be acceptable for both sides. As I mentioned, though, the Strait of Hormuz is the focal point, and right now on the water, it is the Americans who seem to have that control. The US naval blockade isn't just holding, it's working. And CENTCOM says 10 vessels were turned back from Iranian ports in the last 24 hours. There have been no strikes on ships or tanker seizures, so the ceasefire is holding as well. And what was also interesting was the fact that the US Treasury actually doubled down again last night by tightening the economic vice and sanctioning more than 24 people, companies and vessels, all linked to the smuggling of Iranian oil. So the US has also been very effective here in cutting off the economic tap that Hormuz provides to the Iranians. And of course, not surprising to see Iran pushing back, but it's using words, not force. Iranian officials said that if the American naval blockade continues, it will shut down all exports and imports across the Persian Gulf, the Sea of Oman and the Red Sea. Tehran calling this blockade a prelude to a breach of the ceasefire. It's a significant escalation in rhetoric, but markets aren't necessarily taking it seriously, which is why we've seen oil back to around the 90 USD handle.
Dan, I'm going to ask you a complicated question, but I'm sure you've got a very simple answer. Well, no, you haven't got a simple answer. But when you said the leaders of Lebanon talking with the leaders of Israel, something glaring stood out to me, and that is the fact that my understanding is the leaders of Lebanon do not control the south of their country. It is Hezbollah that controls vast tranches. So how is it long term in seeking peace if the leaders of Lebanon and the leaders of Israel speak rather than the leaders of Israel and the leaders of Hezbollah?
It's a really good point. And of course, Hezbollah officials in the last 24 to 48 hours have suggested that there can be no peace without their involvement. But at the same time as well, there has been quite a significant shift happening inside Lebanon over the last couple of months, with the civilian government there led by Nawaf Salam essentially trying to isolate Hezbollah himself. There is a big movement inside the country to try and push the influence of that Iranian proxy away. And that's part of the reason that we have seen Lebanese officials actually being open to the idea of even having talks with the Israelis in the first place. Now, this is a very complicated country. The Lebanese diaspora is diverse, multicultural, multi-religious. Of course, there are a lot of competing narratives internally, but this is being viewed as quite a historic breakthrough here, because it is the first time in many decades that we have seen not just the leader of a Lebanese government, but also the head of an Israeli delegation actually deciding to meet face to face. So what comes of this remains to be seen. How it's going to impact the ceasefire is also unclear, but this is also being viewed with some optimism, and it is being seen as another sign of progress for the region.
OK, Dan, thank you very much for bringing us up to speed on all of that. Still to come on the show, the fallout from the conflict in Iran dominates discussions, as you might expect, at the IMF World Bank Spring Meetings. We will hear from the ECB's Joachim Nagel next. Plus, the world's biggest chip maker posts record profits in the first quarter. Arjun will break down TSMC's results for us. And we'll hear how the Iran war is impacting industrial Germany with the CEO of Bosch. That interview at 8:15 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Let's have a look at how the markets are doing. And this was the picture on Wall Street on Wednesday. Two very important figures out of all of those on the screen right now. Look at the closing level for the S&P 500 and for the Nasdaq Composite. Both of them hitting record highs by the close of the session, touching intraday highs and then closing at new record highs. Stocks rising in recent days. This after the talk of those possible peace talks resuming in Pakistan. We're to understand that those will resume next week between the US and Iran. Clearly, equities investors are seizing on that optimism in terms.
Can I interrupt you briefly?
Absolutely.
I often wonder in my job over the last 25 years how many days you can rally on the same story without new news. And the answer very often is a lot. So we had that rumour about more talks and Trump saying it's nearly done. You know, that's kind of been the mantra for 3 sessions now. At every session, the market's gone up. But we've had no news.
But I think there's that inbuilt, we refer to it sometimes, don't we, that inbuilt fear of missing the rally, which,
absolutely.
You know, it was only a year ago that people who found themselves on the wrong side of the recovery after Liberation Day felt that, you know, they'd missed out, and so they want to make sure they don't. I think that could be playing into sentiment.
It's been an enormous rally, and I'm just looking, you know, I mean, can we put the VIX up actually, Rod, if possible? The VIX is currently trading at 18.17. That is factoring in pretty much zero fear of this not working out. And I just think that's asymmetric. By all means, be confident. That's great. Thank you, Rod. Yeah. By all means, be confident that this war is ending. Thank God, we hope, you know. But 18.17, given where it's been, is factoring in zip downside, I would suggest.
Yeah, I mean, I was just glancing at the numbers. Year-to-date change for the S&P 500. Year-to-date, so far, up 2.6%.
Given everything that's being thrown at the world. And
the Nasdaq, 3.33%.
I know, it's crazy.
Year-to-date.
Is it crazy? I don't know. I mean, actually, having said that, let me take the opposite position. People are looking at the stocks themselves. And funny enough, I was talking to George off camera about this as well, is that I think people are changing what looks like a safe haven. I think they're worried about the fiscal position of sovereigns and that. So the traditional position of equities as risk on, yes, that's still there. But I think also people are thinking, why don't I own these great companies that are turning out fantastic earnings rather than having risk elsewhere in my portfolio?
Yeah, and that's the other theory that people have posited, is that for the last couple of months, people have been having to trade on the basis of the headlines and the uncertainty and second-guessing what's going to happen. But now they've got absolutely solid fundamentals. We're into earnings season. The big US banks have reported some really strong figures, and the stock prices have gone up and reflected that. And actually, investors are now able to trade on the basis of hard fundamentals of how these businesses are performing, and that is adding to the optimism that, you know, if you might say, the other misplaced optimism or overly generous optimism, given, as I say, when I was asking Dan a moment ago, at the moment what we have is talks about talks. We're yet to have concrete details on the dates and the times of those happening. So that's the picture on the US markets, and let's bring up the Asian markets as they are currently performing. And if you're looking for optimism, yeah, there's plenty to be found there. The Nikkei 225 hitting a record on Thursday. Look at that. It's currently up 2 2/3%. The Kospi, the Korean benchmark, up more than 2%. And the Chinese markets also trading higher. China, actually, it's worth mentioning, its economy accelerated in the first quarter. GDP grew 5% in the 3 months to March. This is data from the National Statistics Bureau there. It completely bust through the economists' forecast from Reuters. They were looking at growth of 4.8%, and it also exceeded the 4.5% in the previous quarter. So clearly that adding to some risk on sentiment in the region as well. In terms of how will this play out once European trading gets underway this Thursday, Well, again, a bit of a mixed picture. The Stocks 50 and the DAX looking to open higher according to the futures. FTSE 100 looking to have a negative start to the session if futures are correct, perhaps reflecting the dip in the oil price, Brent down almost a fifth of 1% at the moment, at just under $95 a barrel. Of course, big oil companies listed on the London index, and it may be creating a bit of a drag there.
Geopolitics front and centre at the IMF and World Bank Spring Meetings in Washington, D.C. this week. Karen spoke to a number of policymakers about their expectations for the global economy and the impact the war in the Middle East could have. Well, the French Economy Minister Roland Lescure told CNBC France was well prepared to manage risks, but urged his G7 partners to work together to resolve the conflict.
We are more sheltered, better prepared, because we have an energy mix that's more resistant. We have about 80% of our electricity that's nuclear. We have 40% of our energy mix that's carbon-free, that's not depending on any imports. So we're kind of weathering the storm, but still, we had a resilient economy going into the crisis. Our run rate was probably about 1.2%. Inflation was running below 1%. And, we're probably going to have less growth and more inflation. This is a central scenario. Obviously, there's risks on both sides, but the downward risk we need to be very vigilant upon, because if the conflict gets more intense, if it lasts for too long, we may get bad news for sure.
That was very evident in the IMF forecast this week, that there's a benign scenario that the war is wrapped up in a matter of weeks and then some of the effects fade out by mid-year. How concerned are you about the other scenario, which takes growth right back to levels that we saw in the pandemic and also in the financial crisis?
Well, very much concerned because of the impact it would have. So that's why we have to put all our efforts in solving the conflict. It's not an easy task. Obviously we're going to talk about this here, having a G7 meeting of financial ministers this afternoon. It's important to realize how much of an impact this may have if it lasts. We know that the Strait of Hormuz is a bit of an economic knot of this conflict, so we need to undo this knot. Lots of work is going on at the diplomatic level to do that. That my president and the British Prime Minister are hosting a meeting on Friday to try to converge diplomatic efforts to make sure that once de-escalation takes place, we can, free up Hormuz, which is very important.
The topics that you're bringing up at the G7 are highly significant. The global imbalances that could be evident on the back of a conflict like this yet again, because it's the layer effect, isn't it? That you've had a pandemic, you've got the Russia-Ukraine crisis, you've had tariffs, and now the conflict. What imbalances are you most concerned about?
Well, I'm concerned by the fact that when you look at the world, China is exporting everywhere. I was going to say way too much. The surplus was about $1,000 billion last year. It's probably going to be 1,200 this year. And this is at the expense of a very unbalanced growth, both there, here, and in Europe. So at the end of the day, the diagnosis is fairly simple. China needs to consume more. The US need to save more, and we in Europe need to invest way more. But this is easier said than done. So the idea of the G7, that's going to take this subject at hand at the leaders level, not just at the financial minister level, is to address that issue. Because if we keep on going that way, this is going to end up in tears, and we don't want that. So the earlier we address this, the earlier the IMF and the World Bank are going to help us establish their diagnosis, establish solutions to correct those imbalances, the better we're going to be. And it's about time we do it.